In forex trading, so many people are successful, while so many people are unsuccessful. But the fact is that the people that are unsuccessful are more than the people that are successful. If out of 100%, 2% of traders are successful, that means over 98% are not successful. The reason is because these 2% of traders that are successful are doing the right thing, while the 98% of traders that are not successful are doing the wrong thing. So that is why in today's video I am going to be sharing with you the reason why you are not successful in the forex market. I'm going to share with you the mistakes that you are making, which is preventing you from becoming successful in the forex market. So the main idea behind this video is for you to watch this video from the beginning to the end, understand your mistakes so that you can correct them, because you can only become successful in the forex market if you stop making all those mistakes, because these are the things that are hindering you from becoming a millionaire. Maybe you have a target that maybe in the next 1 year you become a millionaire while trading the forex market, but at the end of the day you keep on blowing your account consistently. So that is why I'm going to share with you some of the mistakes that you are making that is preventing you from becoming successful in the forex market. So ladies and gentlemen, you all are once again welcome to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. So now, for you to become successful in the forex market, you need to understand two key concepts in the forex market, and this concept has to do with the psychology of a forex trader. Now, as a forex trader, we have two types of traders on the psychological aspect of viewing the forex trading industry. We have the FOMO and we have the JOMO. FOMO simply means a fear of missing out. Fear of missing out, right? That is the meaning of FOMO. So there are some traders who are, they are scared of missing out from a trade, and they end up jumping into a trade that is not even the best time to jump into, because they are scared that they are going to miss this opportunity, and they jump into that particular trade. At the end of the day, they blow up their account, right? So after this video, you are going to ask yourself, are you a FOMO or are you a JOMO, right? So we are going to see the difference between a FOMO trader and a JOMO trader. So I want you to be sincere to yourself after watching this video, right? Because being sincere to yourself will help you to become successful in the forex industry. You don't need to lie to yourself. If you are a FOMO, then you need to upgrade to a JOMO, right? You can change, right? You can change, even though it's difficult. You can work on your emotions, right? You can graduate from being a FOMO to being a JOMO, because the reason is that being a FOMO makes you to remain where you are, no progress, right? But being a JOMO makes you to be progressing every day. And for you to become a millionaire is at the other side, that is being a JOMO. Because if you are still a FOMO, you end up being poor. Even if you study the forex market, study many strategies, as long as you are still a FOMO, you keep losing consistently in the forex market. Why? Because you are always chasing after trade. So we are going to look at the difference between JOMO and FOMO. Now, a JOMO trader knows their mind, has a solid trading plan, and doesn't chase the market. Instead, waiting for opportunity that fits with their trading strategy. Let me repeat it again. A JOMO trader knows their mind, has a solid trading plan, and doesn't chase the market, instead waiting for opportunity that fits with their trading strategy. A Jomo doesn't chase after trades. A Jomo is not desperate. A Jomo doesn't believe in the get rich quick scheme. A Jomo is self-disciplined. A Jomo is someone who has rules and abides by them. So a Jomo is a powerful method of trading the forex market. So if you are a Jomo, kudos, you are on the right track, because a Jomo is not moved by market reactions. A Jomo is not moved at all. He has a plan and he always stick with his plan. He has a trading journal, right? That is a Jomo for you. A Jomo doesn't rush trades. He has a strict trading plan that he always abides and follow, right? So that is why I said a Jomo is a trader who knows their mind. They know what they want. They know where to place their stop loss, and they know where to place their take profit, and they know the exact point to enter their trades. And if the trade has not gotten to their point, they will just stay and be watching the trades. They are not desperate. They are not rushing the trades. They have a fixed target where they are waiting for the price to come to, and once the price comes, they swap into action, right? And they have where they place their stop loss, so that if the price goes against them and hit their stop loss, they will accept their loss. And those who have where to place their take profit, because they believe that that point is where price can reverse, right? So if the price breaks through that point, then they will know that the trend continues, and that is the resistance level if you are trading from the support. So these are the things, the qualities, the skills that a Jomo has. Now we have discussed about the Jomo. Now let's talk about the FOMO. The FOMO trader is the opposite of the Jomo trader. So if you can rewind everything I said about the Jomo trader, just turn it upside down. That is the opposite of a Jomo, is the FOMO. Right? A FOMO trader is someone who is continually burdened with the fear of missed opportunity. That is how simple it is. A FOMO is a trader who is continually burdened with the fear of missed opportunity. A FOMO is always in a hurry. A FOMO is always desperate to catch trends without even looking at his or her trading plan. He doesn't want to miss an opportunity, right? So that is why he always rush into the market as fast as possible, even when the market is about to reverse. A FOMO doesn't believe in his strategy. Rather, he is being moved by emotions, right? If his emotion tells him buy, he will just place buy. If his emotion is telling him sell, he will just place sell, without even looking at the condition of the market, without even looking at the structure of the market to know whether if the market is going up, going down, or ranging. He's just being moved by his emotion because he's scared of missing a particular trade. He doesn't want to miss opportunity. And that is what many traders are. Out of 100%, 98% traders are FOMO, while only 2% forex traders are Jomo. So my advice to you guys is that after watching this video, sit down and ask yourself question. Ask yourself sincere question. Am I a FOMO trader or am I a Jomo trader? Right? Don't deceive yourself. Ask yourself that question and answer it by yourself. If you are a FOMO trader, then tell yourself that it is time for me to change from a FOMO to being a Jomo. Because a Jomo trader understands risk management, while a FOMO trader doesn't. It is only a FOMO trader that will risk 90% of his capital or even 100% of his capital That is a FOMO trader. But a JOMO trader knows that he makes money with money, so he has to minimize his money, manage it very well so that it doesn't blow his or her account. And that is why a JOMO trader only make use of either 1% or 2% of his entire capital. So you see that JOMO and FOMO are it has contrast, just like where's an opposite. The opposite of FOMO is JOMO, right? So that is why JOMO are cashing out, while FOMO are burning their account. As you are losing, know that some people are winning. So the ones that are winning are the JOMO, while the ones that are losing are the FOMO. So you want to ask yourself this question: am I a JOMO trader or am I a FOMO trader? Ask yourself this question, and you are the only one that can answer this question by yourself. So this is most of the mistakes that some forex traders, most especially the newbie forex traders, are making, that is preventing them from becoming successful in the forex market. They are making this mistake consistently. Some forex traders do not even have trading plans. They don't even know where to place stop loss. And the funny part of it is that some forex traders do not even place stop loss. They are acting based on emotions, right? A JOMO trader will see a market trending, right? Instead of to follow the trend, he will say this market has traveled too much. And what will he do? He will have to place against the trend. And that is why it's encouraged that you always trade in the direction of the trend, unless you are trading a smaller time frame. Then you can go to the higher time frame and look for support and resistance level. So that is the possible level where the trend can reverse. If a trend is in progress on a 15-minute time frame, know that the support level on a 15-minute time frame can be broken, right? So what you want to do, if you want to trade against the trend, you simply go to a higher time frame, like 1 hour or 2 hour time frame, which you know that once the trend gets to this key level, it will definitely reverse. So these are the ideas that differentiate between a JOMO and a FOMO. So you have to ask yourself this question: am I a JOMO trader or am I a FOMO trader? A FOMO trader will put or place his or her trade when the market has already traveled. Let's say the market is going up, right? And maybe the market has gotten to a point of reversal. Maybe the market has approached a resistance level. If the market is going up, maybe the market has approached a resistance level, right? A FOMO trader will jump into the market and place buy. Say, wow, this market is going up, this market is going up, let me place buy so that I can join the trend, not knowing that the market has reached its final bus stop and about to reverse, right? A FOMO trader acts by emotions, always desperate. They don't have that spirit of patience, right? And they will just rush and place their buy trade, not knowing that they are placing their buy trade at a resistance level. Why a JOMO trader has already mapped out his or her key levels, knowing fully well that once the price gets to this resistance level, it will reverse. So as a FOMO trader is placing a buy trade at the resistance level, a JOMO trader is placing a sell trade at the resistance level. So as the FOMO trader is bleeding, the JOMO trader is happy, is rejoicing. So do you see the different strategies in forex market? And that is why I keep saying it: if you don't have the knowledge of forex market, don't waste your money. Go and acquire more knowledge about the forex market, build the strategies, and you will join the league of the JOMO traders. So ask yourself this question: am I a JOMO trader or am I a FOMO trader? And you are the only one that can answer that question, not me, right? Now let me give you an example. Let me just give you an example so that you understand what I'm talking about, because some people may not even understand what I'm talking about. Let me just give you an example. Now if you look very well on this chart, on this picture, let's just see picture, right? If you look clearly on this picture, right, you understand what I'm talking about. Now with this picture, you clearly understand who a JOMO trader is and the risk behind being a JOMO trader. Now the market is going up, right? The market is going up, going up, going up, and the JOMO trader now comes into the market and sees the market going up, because he or she doesn't have a trading plan, he will say, now this market is going up, but he's scared of placing trade, right? He will be, his mind will be judging him, say, this market is going up, place buy, and I place buy. This market is going up, place buy. His mind will just be vibrating. The thing will go up again. Say, this market is still going up. This market is still going up. He will still be watching the market. Market will go up again, not knowing if he placed his trade when the market just started going up. At least he would have gotten into the right time, right? But for the fact that his mind is judging him, he will say, okay, let me watch to see whether if through this market is going up. The market came to this point, right? You still say, this market is going up. The market came to this point again. You say, this market is going up. The market now came to this point, and he said, no, this market is going up. He will not place a buy trade, right? He will not place a buy trade somewhere around here, or maybe just, let's say he placed a buy trade somewhere around here, right? Not knowing that he's just close to a resistance level, and this might be the resistance level. And for the fact that he saw this move, he is now convinced that the market is going up. He will not place a buy trade here, right? And maybe some FOMO cannot even place stop loss. Let's assume that he's lucky enough to place a stop loss, and he placed a stop loss somewhere below here, right? You will now see that the market will just go a little and then reverse against him and break and hit his stop loss, right? There are some FOMO traders that are so funny that they will keep shifting their stop loss because they don't want their stop loss to be triggered. They will be having the hope that the market will reverse, right? So once they placed their stop loss somewhere here, right, and then place their buy trade, and the market just move a little and reverse from here, because this is clearly a resistance level. The market now reverse from here, and start going down. Maybe this is their stop loss, and the market gets to here, about to hit their stop loss. They will now shift their stop loss down again, saying, no, this market cannot hit my stop loss, it will reverse. They'll be having that hope. The market will now come again, approaching to touch their stop loss. They will shift it again, right? They say, no, this thing cannot touch. Now they are in the period of panic. Their mind will start beating. They say, no, they will not put their stop loss here, right? With hope that the market maybe will get to this place and reverse. The market will still keep going down. Before you know, the market will approach their stop loss here, right? They will shift their stop loss again to this place. Say, no, this time around, this thing must reverse. Right now, they are acting on emotion. Their emotion is judging. They are just trading based on emotion. They don't even know what they are doing. They are just working on their emotion. Their emotion is just telling them what to do. And you just watch, and as this thing is going, that is how their account is going down. Their account is going down, right? Now they are panicking. This is the level of panicking. They are not in a panic, right? They are panicking, right? All those kind of stuff. They will start panicking, right? And the price will get here. Instead of them to just accept their loss, say, okay, fine, I'm accepting. Let me just accept this loss. They will still, no, this thing cannot happen, and they will not shift their stop loss maybe again here. And as they're shifting their stop loss, that is how the market is going to their stop loss. It will even look as if the market is targeting their stop loss. Say, no, I must stop you, right? And as the stop loss is going down, the market is chasing after the stop loss, right? So they will not push their stop loss again down to this point, right? So once they place their stop loss down to this point, the market will still get to this point and then hit their stop loss. Maybe they have lost so much money, and once the thing now hit their stop loss here and they have lost so much money, they will become angry, resentful. That anger will fill their heart. They will say, what kind of thing is this? And for the fact that the market is going down, they will now say, okay, fine, this market is going down and this market can never stop going down. Since the market started going down all the way from here, the market is going down, let me just place a sell trade, right? So they will now close their trade here, right? They will not close their trade here, maybe, or they will allow their stop loss to be triggered here, not knowing that this place happens to be a support level where the market is likely to reverse from. So when the price now hits their stop loss here, they will not conclude that the market is clearly going down without looking at the market condition. They'll just place a sell trade again, another sell trade somewhere here, right? They will place another sell trade somewhere here, hoping that the market will keep going down. Since the market is going down all the way from here, they will be hoping that the market will keep going down. And what happens? They will not even know that they placed their trade at a support level. And once they place that trade, they may put their stop loss somewhere here, and the market will just go down a little bit and then reverse, right? The market will not reverse because this is clearly a support level. So when the market now reverse and start going against them, they will become angry. They will start saying, yeah, these brokers are wicked. These people, they are manipulating my market. They are manipulating my price. This is scam. Forex is scam. Forex is scam. In fact, I will never ever trade Forex. Right? The thing will just be going against them, and they will be looking at the market, see what is happening. They will repeat the same thing that they did here. They will repeat it here again. That is FOMO for you, because they are working on emotion. They will keep on increasing their shifting their stop loss, right? And the market will be going against them, right? They will still repeat the same thing, and the cycle repeat itself. They still keep on doing the same thing, one after the other, and that is how they keep losing in the forex market, right? Because they do not have a trading plan, and they do not know where and when to place a trade. They're just acting based on what they're seeing in the market, based on their emotion, not even thinking before they act. So that is a FOMO, right? You see how these guys are blowing account every day, and when they blow the account, they will place the blame on the forex brokers. They will place the blame on the forex brokers or the big banks, saying that these people are chasing after their stop loss, right? So once they lose, they will repeat the same cycle, and they will keep on losing. That's why I see a trader losing 10 times, 20 times. In fact, the trader will just get tired and say, this is not my destiny, I'm giving up. If other are making it, and I'm losing, I'm giving up. Not knowing that they don't know they don't know how to trade. They don't know the techniques of trading the forex market. You need to have that knowledge. Let me give you another example again, so that you understand what I'm talking about. Now, if you can see this picture clearly, right? You can read what is written on this picture. You understand what I'm talking about. Now, for a FOMO trader, they have some emotional threats, right? So let's assume this is what we call optimism, excitement, thrill, and euphoria, right? Now they are about to place a trade, and they saw this move, right? They are optimistic that the trade will go up, right? But they have not placed their trade. Now the trade got to this point, they become excited, right? Excitement that yes, the trade is going to that direction. Now when the trade goes to this point, they become thrilled, they become happy, they become confident that yes, this is the right time for me to place trade, because clearly they have seen that the trade is going. They will now place their buy trade here, right? And the trade will now move against them, right? Get to this point and goes there. And when the price start going against them, they have started seeing zero. They are started seeing minus. They started seeing minus instead of plus. They are not seeing minus. That is red, meaning you are losing. They become, they start having that what we call anxiety. So once the trade start going against them, they start having anxiety. And let's assume, for instance, they placed maybe 80% of their capital, right? Or they placed 70% of their capital, right? So which means in few time they will just blow the account. They will start having that fear. So once the trade now comes here, they start having the feeling of anxiety. As the trade is going, they will start have different feeling will start entering into their body. They will start having the feeling of denial that the trade is going against them. And then when the trade gets here, they start having the feeling of fear. So to place stop loss will be difficult, and some of them that place stop loss will not be shifting their stop loss because they don't want to accept that loss, not knowing that had they been the place stop loss here, the loss would have been minimized. But they are scared that they don't want to lose. They don't want to lose. This money is too precious to them, so they will keep on shifting their stop loss. So when the thing comes down to this place, they become depressed. Yeah, they become desperate. Right? It starts hurting them. Then the thing drop again. They start panicking. Emotion. You see someone moving, you think that person is mad. You see somebody moving, and I don't know how to explain it. You think that person is mad, right? They start, they start panicking. They begin to panic, and this is how it is, right? So when the trade now gets here, they will just have to close their trade, right? They will say they can't take it anymore. They will have to close their trade, and then they have lost so much. And then they will not conclude that the trade is going down. That is capitulation. They will not place a sell trade, right? They will not place a sell trade, saying that this trend will not end, right? This will never end. I need to sell, this will never end, I need to sell. So they will not place their sell trade here with the mindset that the trend will continue. And what happened? The thing goes a little, they feel happy, they spot dance, feel a little bit relief, and then suddenly the thing reverse, the pressure comes in again, and before you know it, the thing goes against them. So the cycle will now repeat itself again, right? So this is the emotional threat that is preventing so many forex traders from becoming successful in the forex market. This is FOMO, right? So it's not left for you to tell yourself, am I a FOMO trader or am I a JOMO trader? And then ask, and then know within yourself that if you are a FOMO trader, you are doing the wrong thing, and if you're a JOMO trader, you are doing the right thing, right? And if you're a JOMO trader, keep on doing what you're doing because you are on the right track, right? But if you're a JOMO trader, I must be sincere to you, you are on the wrong track. So you need to come out from being a FOMO trader to being a JOMO trader, so that you start enjoying the fruit of your hard labor, right? You start, profiting from the forex market. You start cashing out consistently from the forex market. So that is why you see some guys driving Benz, driving Range Rover, driving Lamborghini, driving all sorts of exotic cars. These guys, if they tell you how they started, you will not understand, because it's a gradual process, right? There are times that you are a FOMO, and there are times that you graduate to a JOMO. It's an experience. I will not tell you that no forex traders I won't say that there is no forex trader is not a JOMO. Even those successful ones, there was a time when they were FOMO, right? And they had to work on themselves for them to graduate from being a FOMO to being a JOMO. So it is when they now graduated into a JOMO, that is when they started seeing consistent profit, and that is why you see them buying cars, buying houses, living their dreams, traveling all over the world, and you are still stuck in your FOMO. So now, if you want to enjoy this wealth, financial independence, financial freedom that these JOMO guys are enjoying, you have to graduate from FOMO to JOMO, right? Just like a student, you are in the university and you are going through a lot of stress. Lecturer is doing this to you. You are going through a lot of stress. All the time you are reading, doing this, right? You are suffering. So what do you need to do? You need to work on yourself, work hard, so that you graduate with flying colors. And once you graduate with flying colors, you get a better job that pays well. And when you get that better job, you start enjoying the fruit of your hard labor, right? But if you don't work hard, you keep failing and you keep repeating the class, and you remain in the university while others are graduating. The same is applicable in the forex market. So it's not left for you to know whether if you are willing, if you are determined to upgrade yourself, to come out from being a FOMO and upgrade yourself to a JOMO. So that is the only way you can become successful in the forex market. Ladies and gentlemen, I think this is all I have for you on today's video. I hope you love this video, and I hope you understood this video very well. So I want to know your thoughts and your opinion in the comment section. I want to know your thoughts and your opinion in the comment section. And if you are a FOMO trader, please change. And if you are a JOMO trader, kudos. So if you love this video, give us a thumbs up. If you love this video, give us a thumbs up. Subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. Like I said, this channel is all about forex trading, and if you are not subscribed to this channel and you're a forex trader, you are doing yourself a disfavor. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Bye.